Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 15th, 2025, and we're diving into Aeva's first quarter earnings report for 2025. Aeva, a leader in next-generation sensing and perception systems, has just released their latest financial results. Joining us today is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Aeva's report is quite intriguing, especially with their advancements in LiDAR technology and strategic partnerships. I'm excited to delve into the details.
Revenue and profitability overview. Let's start with the top line. Aeva reported a revenue of $3.4 million for Q1 2025, which is a significant increase from $2.1 million in the same quarter last year. John, what does this tell us about Aeva's current market position?
This revenue growth of 61% year over year is quite impressive, indicating strong demand for Aeva's products, particularly their new high-precision sensors. However, they still reported a GAAP operating loss of $30.4 million, though it's an improvement from last year's $37.3 million loss. On a non-GAAP basis, the operating loss was $25.9 million, showing that Aeva is making strides in cost management and operational efficiency.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of -59 for Aeva, based on a survey of 3 analysts. However, Aeva reported an adjusted EPS of 45 cents. How significant is this beat, John?
This is a notable beat on the EPS front. Reporting an adjusted EPS of -45 cents against the forecasted -59 suggests that Aeva is managing its expenses better than expected. This could be a positive signal to investors that the company is on a path to potentially narrowing its losses further in the future.
Strategic initiatives and partnerships. Aeva has introduced the Aeva Eve 1D sensor and signed strategic customers like SICK AG and LMI Technologies. They've also entered a $50 million investment agreement with a Fortune 500 company's technology subsidiary. How do these moves position Aeva for future growth?
The introduction of the Aeva Eve 1D sensor is a game changer in industrial automation, offering greater precision and cost effectiveness. Securing strategic customers and a substantial investment agreement not only validates Aeva's technology, but also provides the financial backing to expand into new markets, including consumer and automotive sectors. This positions Aeva well for future growth and diversification.
Operational efficiencies and future outlook. Looking at their financial health, Aeva has $81 million in cash and equivalents, with an available facility of $125 million. CEO Soroush Salehian mentioned that Aeva is at an inflection point. What does this mean for their future prospects?
With a solid cash position and additional financial resources, Aeva is well equipped to invest in R&D and scale their operations. The CEO's statement about being at an inflection point suggests that Aeva is poised to capitalize on its technological advancements and strategic partnerships, potentially leading to significant market penetration and revenue growth in the coming years.
Key takeaways. In summary, Aeva has shown strong revenue growth and an EPS beat this quarter, alongside strategic investments and partnerships that bolster their future outlook. John, any final thoughts on Aeva's investment prospects?
Aeva's advancements in LiDAR technology and strategic collaborations position them well for future growth. While they are still operating at a loss, their financial management and market expansion efforts are promising. Investors should keep an eye on their progress in achieving profitability and market penetration.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Aeva's performance in the comments below.